Welcome to Oregon Cash Flow Pro. Today it's going to start a series of 4 videos where I answer some questions that were posed on YouTube. Very good questions by Matt Ellen, which you can see right here. So this video will be the first question. And if you're interested in seeing the other questions answered, check out these videos right over here. To begin with, let's start with the first question. Is there a significant difference on the efficiency of an IUL policy for a 40 or 50-year-old male, standard non-tobacco versus preferred non-tobacco? And also, if you initially get rated as a standard, can you re-qualify in future years with a better health rating similar to a whole life policy? Good question. And I've ran 2 illustrations that I have pulled up here. This one you can see is for a 45-year-old male, standard non-tobacco. And this one on the right is a 45-year-old preferred non-tobacco. Now, is it more efficient? I went to the internal rate of return in these illustrations. That's where we can measure the efficiency. And you'll notice in each year that the preferred non-tobacco is slightly more efficient. Here in year 1, minus 10.33% on the standard non-tobacco, minus 9.79 on the preferred. If we come down, I just did for a policy design, this one is optimized for putting in approximately 74,000 a year for each one. The MEC limits are slightly different, so that's one thing. I ran this with each person putting in the max that they can put in for 1.1 million in death benefit. The reason I went 1.1 million in death benefit is because this is with Allianz. Allianz allows me to do a 10-to-1 split between base premium and supplemental term, which means 100,000 base, which is the minimum I can do. And then we add in $1 million in supplemental term, bringing us to 1.1 million total death benefit. Now that is the maximum amount of supplemental term that we compare with that base face amount. And that base face amount is what determines the agent commission. The supplemental term doesn't pay any commission. So with this type of design, it gets us the most bang for our buck. We're able to put in the most amount of money and have the lowest amount of costs associated with that amount of money. Now from here, it scales up. But if we go down in death benefit, our MEC limit is going to lower, but we're going to have to lower the death benefit from the very inexpensive supplemental term. So that's why we went with this design. So recognize not all policies will look like this. They will not all have this type of efficiency. But when we get down here to age 65, you can see we have an internal rate of return of 5.83% on the standard non-tobacco, and we're at 5.95 on the preferred non-tobacco. That's not a very big difference. We're basically talking 0.12% difference by age 65. Now, what does that mean in real dollars? Well, we've got approximately 2.83 million in cash value in the standard non-tobacco and 2.871 in the preferred non-tobacco. So the impact is about $40,000 over the course of the first 20 years. It's not a huge impact. We're putting in 74,000 a year, and the difference is about $2,000 each year. Now, the impact as a percentage gets lower and lower the farther we go. If we look down here by age 80, we're at 6.32% for the standard non-tobacco and 6.4% for the preferred, 0.08 difference. But these dollars are getting much, much bigger. So by an actual dollar impact, it's about $150,000 difference. We've got 7.52 million on the standard and 7.678 on the preferred. The small difference in the internal rate of return is not to say that it's insignificant. We are talking about big dollars here, and big dollars can add up to a lot when they get to compounding. So we always want to get the best health rating that we can possibly get. You can see it makes about $150,000 difference now over the course of 35 years. So that brings us to the second part of his question, which is, if you initially get rated as standard, can you re-qualify in future years with a better health rating? Yes, you can. And this is generally across the board for any insurance policy. After the first year, you can usually go back to your carrier and ask them to get re-rated if you think something has changed in your health that should qualify you for a better health rating. Does not mean that you have to accept whatever the results are. So let's say you get a standard health rating because of reason X. A year from after you start the policy, or 5 years after you start the policy, reason X goes away, or you've been living with it long enough that you think that the insurance company might give you a better rating for it. You go back to the insurance company and you say, hey, can I get re-rated on this? I would like to get a better health rating. And so they'll put you through a underwriting to get a better health rating. And let's say they come back with a preferred plus health rating at that point. Of course, you're going to accept that. All the underlying costs in the policy should go down because now you're going to just pay less for your insurance. If they come back with a rating that's lower than standard, let's say they find out that you've got diabetes that you didn't know about, and they want to give you a rated rating, meaning a table rating of 3 or 4 or 5, which is basically just a flat dollar amount that they're going to add on to the base cost of any insurance. Well, the policy is not going to look very attractive at that point. That's a worse rating than you signed up for, but you are not obligated to accept it. So when they come back with that offer, you can just say, you know what? No, thanks. I'm just going to stick with the rating that we had to begin with. That's guaranteed by contract for that policy that you already bought. And you can just carry on. And if something changes again later, you can come back and ask to be re-rated again. If for some reason something showed up and you don't think it should have been there, or if it was something holding back your health rating that was a temporary reason, maybe you ate something right before the exam and it caused your test results to be skewed, oftentimes the insurance company will just say, okay, we'll reconsider it, but you'll have to get this test redone at your cost. And I've had clients do that. It comes back, great, we get the better rating. So yes, we can get you re-rated for a better health rating as your policy progresses. Generally, an insurance company will allow you to ask for that re-rating once a year. They're not just going to do it every single year for you. It does have to make sense. There is a cost to that for the insurance company. And generally, they'll do it at no cost to you. So if you're coming back year after year and asking to be re-rated and it's not getting any better, and they just have to keep putting out money for that, they're probably going to stop. They're probably going to say, no, you'll have to do this at your expense at this point. But if it's something that's infrequent and there's a legitimate reason for asking to be re-rated that we can demonstrate, then usually the insurance company will do it at no cost to you. So thanks for the question, Matt. Be sure to check out the other videos where I answer the rest of your questions. Thanks for joining me today. We'll see you next time. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.